RC Peck here. There are three things that I want to cover this week in my review. Probably more than three, but I have three on my on my notes here. The first is I want to talk about unemployment. It is horrible. We'll talk about and we'll look at this through price charts, but so far 4 weeks in a row we have 22 million people unemployed. There's about 152 million people in employment in this country. So right now we're at about a 15% unemployment rate, and gotta believe that's going to go up to 20%. So we'll talk about that. I want to talk about precious metals. A lot going on in precious metals. Man, that thing was sleeping for some time, but I believe it's woken up. It's definitely woken up, it being gold and other currencies. And there's some crazy things going on right now. Plus, I want to talk about a gold mining share. I've talked about this one before. A long time ago, I talked about this specific company. I said the best. I think I probably called it the best precious metal mining company ever. If you were going to ever buy an individual precious metal mining company, it would be this. I said that a long time ago. When I say a long time ago, 5 years, 8 years ago, maybe even 10 years ago. And damn, this thing just keeps doing its thing. And then let's talk about spending habits. What has changed? Like, what has changed with this shutdown in spending habits? Which ones have accelerated? Which ones have decelerated? And I think more than anything, the virus has just accelerated what was always going on here, right? There was this polarization in this country, and it's continuing to happen, and it's happening in the stock market now. There's true winners and losers, and they're big winners and big losers. So let's do that. Let me get behind the computer, get to some price charts and some other goodies that I have, and we will jump into that. And guys, if you like this, please go ahead and subscribe, forward it to a friend, do the thumbs up, do all the things that would help promote this channel. Okay, let me jump behind the old price charts and we'll get to that. All right, give me a minute. All right, it's hard to wrap my head around just the numbers that are coming in, the unemployment numbers. So in the last 4 weeks, a total of 22 million people have filed for unemployment. And these are interesting numbers, right? Because there's no way that that number is done. And that represents about 15% of the working population in this country. And I'm just going to share with you one really small kind of personal story where these numbers don't, the story doesn't show up in the numbers. And no one needs to feel sorry for myself or my ex-wife, but it's just one example of how numbers are not being counted. So my ex-wife is a healthcare provider, and she has to go to work, and she has to be there for frontline working. So when the kids were taken out of school, I think we got the first sign that they weren't going back to school for 6 weeks on March 11th. So my ex-wife sat down and put a whole schedule together for her taking care of them part of the time, me taking care of them part of the time, and our nanny taking care of them part of the time. And she has to use up all of her vacation to take care of her time that she wants to take care of the kids. And that's just one example of where, I mean, look, she's lucky to have vacation. I get it. But she is spending her vacation at home with the kids, right? She's not actually going to use it now to go travel or go do something with the kids. As some of you who've been in my world for a while know, that even when we were married, we take the kids on our own individual little trips. I'd take them and then she would take them. And that's just some simple little example of how one person's behavior is going to be changed, buying behavior is going to be changed because of what's going on, right? She didn't lose her job. She didn't lose hours, nothing like that. And I just think of how many millions of people stopped looking, or 1099 people who haven't applied or don't know if they can apply or can they apply, or is their state's unemployment website even able to handle them doing this? So it's pretty amazing that 22 million people have filed for unemployment in 4 weeks, right? It was 3.3 million, 6.9 million, 6.6 million, and 5.2 million. Holy camole. It would not be surprising if we saw another maybe, I don't know, 10 million. I mean, last week was 5.2 million, down from 6.6. I mean, these are gigantic numbers. Now, here's what's crazy: the market is going higher. The stock market is crushing it higher, and I think it's because of two things. One, those bigger companies that were bigger and stronger before the market fell, they're just getting bigger and stronger as the market's going up. And the one I have on the screen here is Walmart. And I want to talk about Walmart because one of the behaviors that is changing and that is so fascinating to me is people are now actually doing the click and collect, right? They're actually now getting their groceries online, and groceries have increased. And if you look at the screen, you can see that it's one of the big increases in spending, credit card spending, and debt spending is groceries. And a lot of people are doing the online grocery thing. It's pretty amazing. Here's another way of kind of looking at this data right here, and you see online grocers over here. And I believe Walmart's the largest grocer in the country. I know Target's been pushing hard to put more groceries inside um, their stores. Um, but we're going to see this more and more people are going to do the click and collect. And it's weird. Like, I kind of hope companies like, I mean, Walmart is going to do well. It's doing great. Walmart could probably go up 300% more and still be much smaller than Apple or Microsoft or Amazon. But this guy is doing well. A lot of as I look at this price chart, there's a lot on here. So I want to actually take off a lot of information because um, sometimes when you have too much information on a price chart, it just gets confusing. So let me just get to it. There we go. Oh, that's so much nicer. So here's Walmart. It's doing great. It's been really going up and to the right since the end of 2015. And what's amazing is only Amazon can make people root for Walmart. I mean, Walmart's no angel when it comes to treating their employees right. But somehow I find myself rooting for Walmart. I actually want Kroger to do better, and I want it to go higher. And it's been outperforming the S&P 500 since mid last year, since really July of last year. Now this is just a normal price chart, but from a relative point of view too, it's also been outperforming the S&P. So I kind of hope that the Krogers do well and they kind of finally figure out this online order everything and make it good. As it is, it's moving up. It was moving up into the crisis and the correction, and it just kind of went back and forth. I know we're super zoomed out here. Let me actually go. I move closer in here. So it is on this scale looking very sidewaysy, but since July of last year, it's been going up. So it's just really interesting what's going on with retail, right? And I want to end retail by talking about what's getting crushed: airlines, lodging, cruises, online travel agencies, rental cars. Oh my gosh. Rental cars are like, it's like the double whammy, right? No one's renting the cars. And then the cars they own, that depreciation is accelerating, right? Because holy camole, what's going to happen when we come out of this and you don't need three cars? I mean, I have one car. I know a lot of Americans have two or three cars. So those rental agencies are going to get crushed even more. And we can see this show up, right? So here's Carnival Cruise right here. And I mean, look, it was doing badly going into this. It was falling. It had been falling for 2 years, and the S&P was not. So it was underperforming for a full 2 years coming into this. And then it just absolutely cratered, fell off the cliff, bounced, and not looking too healthy right now. I don't remember the exact numbers, but Carnival Cruise raised, oh gosh, 6.5 billion, 10.5 billion, somewhere between 6.5 and 10.5 billion dollars of debt, right around 6%. Isn't that amazing? And I think the reason why they had so many people subscribe to their debt is because they're like, look, the government's just going to buy it anyway. The Fed's just going to backstop everything. But man, when I look at this price chart, who gets back on a cruise ship, right? Who gets back on a cruise ship when you see, just, I got to show you this. Nearly 80,000 workers are stranded aboard 100 cruise ships still at sea off the US with no paying guests. 80,000, right? Are they getting paid? I don't think they're getting paid. Who knows what is going on? Who's buying a cruise with the idea or the chance that maybe 10% of you aren't getting off for the next month, are going to be floating somewhere around Miami? I just, I don't think here now. I mean, I don't think Carnival ever gets back up to this number right here. That's 2018. That's 60. Let's call it $66. I don't think they ever get back up to it. United Airlines, Delta, the same thing. You see the same story here. They don't get back. Right, the person who was flying 10 times a year last year for business is now going to be flying 8 times, 7 times, 5 times, right? You know, I think airline travel is going to be cut almost permanently by about 30%. I mean, what percentage of all airline travel is business? And I don't actually know the answer, but it's more. I mean, it's a significant, right? It's that in leisure, and that's going to get cut permanently. Same thing with cruises, same thing with hotels. So this is permanent destruction. This is not creative destruction. This is permanent destruction. Now, who came in strong? They're going to stay strong, right? Amazon came into this strong. They're going to stay strong. They're at lifetime highs, right? They were going just sideways. They were in this sideways movement, figuring things out, digesting the last big run. And the fact that they've just absolutely taken off. I mean, the February 19th, February 19th was the peak of the stock market. And since February 19th, Amazon is up 12%. I mean, that is amazing. Amazon's up. Then we look at Microsoft. What's Microsoft? So Microsoft's actually not back above their highs yet. Interesting. Netflix is. If you look at Netflix now, they're at new lifetime highs. So the strong are going to get stronger. The rich are going to get richer. The top 1% are going to get richer. The bottom 95% are not. And we're going to see the same thing happening in the stock market. It's absolutely not fair, but it's happening. The two sectors that I like, or that I am liking, of course, is the technology sector, holding up very well. Even on this 3.5-year price chart, it's still going up and to the right. It looks very beautiful. But you know, the other one that I've been really thinking about is healthcare. Now, what's interesting about healthcare, it could not break above, this is XLV, it could not break above kind of its $93 mark. It was a huge ceiling, and it broke above it, obviously came back down, sat right on that again. You see this kind of sitting on the price, fell with everything else. I want to see how much it fell here. It fell with everything else. It only fell 28.5% when the market fell 34. The S&P fell 34. And then this thing is back above its huge resistance, right? And I think kind of back to when the Affordable Care Act happened and healthcare and biotech really took off, right? Because there was going to be all this spending around healthcare and hospitals and health plans. And it kind of feels like the same thing's going to happen again. And healthcare is, again, it underperformed over here. It definitely underperformed. Now you can look here. It's has still been going up and to the right, but it really underperformed for about a year and a half. But man, with everything that's going on and everything that has changed, I think XLV is going to outperform and XLK is going to outperform. And guys, the losers are going to stay the losers. Energy is going to stay a loser. It was a loser coming into this. If I zoom way out, it's been underperforming for years. That is a horrible looking price chart. That is now an 8.5-year price chart. That just looks horrible. I mean, this thing is down on its knees, begging for mercy. You've got oil, which is amazing that the stock market's going higher when oil is at its lowest, I think, since 2002. 2002. I mean, that's amazing. To my brain, that's amazing that that's happening. So energy is going to stay weak. Finance is going to stay weak. I'm tired of hearing people say if financials aren't doing well, then nothing's doing well. Guys, the 80s are over. The 90s are over. The new financials are technology. It's not financials. Technology is gobbling up finance and gobbling up energy. They're losing market cap, and technology is gaining. And I think now with what's going on in the crazy world we live in, healthcare has stood up and said, "All right, I'm back in the game, guys. I was out for about 18 months, but I'm back in the game." The other thing that I think is back in the game and is really fighting hard to get back in the game is precious metals. And this is a price chart of GDX. And look, it's got to break 31 bucks. Now this horizontal line, it's actually 29 to 31 right there. GDX since what is that 2013 just has not been able to get above that 29 to $31 zone. But man, I'll zoom in over here. This, first of all, this whipsaw with the Corona crash, wow, that was violent. Intraday, that was a 50% loss. Intraday. If you go intraday to that, I mean, that is a magnificent loss, right? Very short term, very much whipped people out of it. And that is extreme volatility. This thing really looks like it is setting up to scream higher. And its next major, really stopping point, major stopping point is about $62. So it's about 100% above this. If I zoom, let's just go to 1.5 year. If I zoom in, you can see the same, where's 29? The same 29 to $31 range between the two blue horizontal lines. And, you know, it might have broken through here if we didn't have the Corona crash. I mean, this was a beautiful basing formation and then absolutely got sent to the woodshed. And guys, it's right back where it was, pounding on that ceiling of $31 again. This is something to keep an eye on. So I said before that there's one precious metal mining stock that if someone was ever to buy a precious metal mining stock, it would be this one. Now, here's what's crazy about this stock. I want to zoom way out. Let me zoom out. Okay. So IPO'd in 08, and you would have no idea that this was a precious metal mining company. It's a royalty company. So they're really in the financial part of precious metals. But if someone showed you this, you wouldn't think, oh, that's precious metals. You'd be like, that's a tech stock, right? IPO'd over here at $9, and now it's at 123. So what's amazing about this is gold peaked in September of 2011 right here. So I'm going to put the two horizontal lines in. That's where gold peaked. And it obviously these are huge moves. All right. So in out of context, you don't be like, wow, that's a 48% move. But you can see how that thing has stayed true. Of course, it's got price volatility. But Franco-Nevada is probably, and I've said this for 5 or 10 years, that if you're ever to own one precious metal mining company, it's Franco-Nevada. And guess what? They're at lifetime highs. And lifetime highs are not a sign of weakness. You got Netflix at lifetime highs, Amazon at lifetime highs, Franco-Nevada at lifetime highs, Walmart at lifetime highs. And so you go with like what's stronger coming out of this? And the answer is, well, online groceries are probably here to stay. Some people are probably going to love that. Go Kroger. Maybe finally, since gold peaked in 2011 in US dollars, gold is at new lifetime highs in almost every other currency around the planet. That talks to the strength of the US dollar. But it's happening. It's going to happen. And so strength coming in. Gold was strong coming in. It's stronger coming out. Technology was strong coming in. It's going to be stronger coming out. And even Kroger was strong coming in, and it's going to be stronger coming out. So look for the things that were strong coming in because what this correction has done, it has again, it's taking the weak out, right? It's taking. I'm going to zoom in now because being zoomed out this far, um, you know, Boeing was having problems before this, right? They were having problems before this. The 737 MAX happened somewhere in here. I'm being really general on my dates, but somewhere kind of in the middle. And Boeing was going sideways before that, right? So there were problems with Boeing before the 730 MAX 8, right? And then all of a sudden they're like, oh my gosh, we have so much debt. We have so much debt. Boeing has so much debt. And look what happens to companies that carry too much debt, right? Not only does this company have a lot of debt, but who's going to buy a new plane, right? And please don't tell me the U.S. aircraft carrier commercial aircrafts are aging. It's like, come on, guys. No one, people are not going to fly as much. We're going to lose about a third of the people who fly, right? Even if the economy comes back to 75%, 75% is not going back to flying. And I think Boeing might be one of those permanently hurt, along with Carnival Cruise, Royal Caribbean Cruise Line, all the airlines, a lot of retail guys. Macy's was not doing well coming into this. And guess what? I mean, that looks like a stock that's going out of business to me. All right, guys. So let's talk about takeaways because it's kind of fun to look at price charts and like, oh, those are neat. It's another thing to actually know what to do and what to do with your money and not have 50 symbols all over the place. Because if you have 50 symbols and they all turn red and they're flashing red, that's going to shut down your brain and you're not going to be able to do anything with that. The key is to really get extreme clarity, right? It's fun again to look at them, but what you want to do is slim down and really simplify your portfolio and simplify your life. Like look at the things that are working and do more of that and have a very honest look at your life of the things that weren't working before the corona crash. Be like, I want to simplify and just do what's best. And I suggest and offer that up to you guys with what I do over at Fearless Wealth and to get trained, to rewire your brain, to really know how to powerfully simplify your portfolio. So let me know what you want me to talk about. You can leave it in the comments, and please forward this and subscribe if you have not. And I appreciate you guys being in my world. All right, guys, so this is just another step in helping you protect your portfolio and your future and your peace of mind and your sleep. So send in some of those questions, again, whether it's in comments or in email to me. And thank you for being in my world. All right, guys, take care.